Yes, thank you. And fantastic on the final session of the day to see the room packed. I slightly feared that it might be a graveyard shift and we would be playing to a small crowd, but I'm glad that's not the case.
It seems to be full.
My name's David Savage. I am the Group Technology Evangelist at Nash Squared. It's a very wanky title. I am not a Web3 expert. When I explained that to you about 20 minutes ago, you said, what the hell are you doing here? But I am a tech podcaster, have been for 9 years, produced about 700 plus episodes of a show called Tech Talks, which is a general technology leadership show. And we do sometimes talk about crypto and blockchain and Web3. And I also make films and find myself in this situation. Very excited to sit here with Raoul to talk about the macroeconomic climate. I also think that most people in here will probably know who you are because you've been treated like a bit of a celebrity before we walked up on stage, everyone wanting to spend a few minutes with you. But let's start with a little bit of an explanation about who you are, your role, and who Real Vision are.
Yeah, so I think most of you know, I came from a finance background. So I was at Goldman Sachs, and then I was running a large hedge fund in London, and then decided to opt out of the rat race, moved to the Mediterranean coast of Spain, and started writing Global Macro Investor, my research service that I still have today. It was over that period that the financial crisis had come and the European crisis. And I saw them coming. I made money out of it. I advised a lot of the famous people in the film The Big Short that was all about this. We were at the epicenter of the system, and we knew what was happening. And friends of mine, I tried to warn them, and they didn't understand. And then friends of friends and friends of my parents came to me and said, why didn't we know? People got wiped out. You know, don't forget, we almost lost our banking system in Spain. People had their deposits taken, you know, everyone with the housing crisis. This was a really bad thing. And it sat with me uncomfortably for a while is, I should do something about this. And people had lost faith in institutions. And it was in that journey, I went on a journey to try and set up the world's safest bank. And that's when I discovered Bitcoin in 2012. And then, so I started investing in 2013. But really the story was, how the hell do I help as many people as possible? And it was to give them the information that they need to navigate this kind of uncertain financial future and give them the opportunities that they need in a kind of unbiased way. And we thought the best thing to do is just bring all these famous hedge fund managers and everybody, and we'll interview them. So we invented the long-form finance podcast at Real Vision. And now Real Vision, for those of you, if you haven't subscribed to Real Vision, it is free, and I will lock the door until you do subscribe. At realvision.com, that's where you get all of the conversations, the video conversations, written research about crypto, give you understanding the macro landscape, how it all fits together, technology. We cover a lot of the tech space, where AI is going, how it's going to impact you. There's also a global community where you can connect with, and we're very Web3 native. We've basically taken millions of people through the journey of Web3. So it's part of our mission is basically to democratize the very best kind of knowledge and give people the network tools and knowledge to thrive.
I mean, I wish I'd known you, given that you saw 2008, 2009 coming back then, because I took a job as a technology recruiter in 2007. It was god-awful. But if we start with kind of tapping into that future gazing, I suppose, and having a look at the broader economic climate, how do you see the ongoing tensions that we're witnessing with Russia and Ukraine, with the Middle East, China, US rivalry impacting the global economy and the financial landscape?
What I've learned in my career, it took me a while to learn this, is what captures people's attention is fear. What the outcome is the opposite. 99% of the, well, 3% of the time over the last 100 years, let's say the US has been in recession, 3%. Yet people anchor on the fears. So they anchor on, through my whole life, it's like, well, Russia's going to send nukes, or this is going to happen. None of these things generally happen. So what I've learned is actually to be an optimist through these things. My particular view on most of the things happening right now is that I actually believe, contrary to almost everybody else's opinion, that the US and China and Europe have agreed what to do with Taiwan, and that's to give it back. Give it back is not theirs to give, but to allow China to do it. I think that Gavin Newsom, the governor of California, going to Beijing randomly, he's a non-geopolitical character. He turns up in Beijing. What he should see is the government of one of the regions. He sees Xi. Xi is not going to see, being the second most powerful person in the world, he doesn't see the governor of California who's just popped into... He went with something. And then he brought Xi back to California, not to the United Nations, not to DC, not to anything else. He brought him to California. The US is building 3 TSMC plants. The world does not function without Taiwan Semi. All of the AI future, everything we understand, every computer, every phone, nothing functions without these guys. They're the most strategically important company in the world. The US is building 3 plants. Germany 1, Japan 1. They're all done in about 3 years. China, nobody can go to war with Taiwan because we will lose the semiconductor manufacturing. Those foundries are foundational to the future of the world. Everybody knows it. So the only answer, because everybody loses in that case, is a compromise. Then we saw Xi go to Europe. So immediately goes to Europe, and the Europeans obviously have to be involved in this, and they asked one thing, which is, everyone's making demand of each other. There's a lot of horse trading that needs to happen to make a mega deal, and their one thing is obviously, we want Putin stopped. If you remember, Xi came straight back from Europe. The first person who went to see him was Putin. Immediately the press leaks came out of AP saying, I'm prepared to stop advancing. Somewhere within this, I think there was a big, very positive upside surprise that comes out of this. Because if you game it all out, there is literally no way that anybody's going to go to war just when we're about to bring AGI into the world. It's just not going to happen. You can't do it. And everybody knows it because everybody needs and wants that technology more than any other technology that has ever been except the nuclear bomb. They're of equal importance in terms of discoveries. So that, I think, is happening. So therefore, that neutralizes, I think, a lot of the Russian situation. The Middle East situation, I'm also more positive about that as well.
Do you mind me asking why? Because, I mean, when I talk to the technology community, they are concerned. Like I was in the States a couple of weeks ago, people generally quite optimistic, looking to October and what the Fed might do, but the Middle East pops up, people are worried.
Look, I'm less sure of this one, but it has been my opinion for a few years now, 3 years, maybe 2 years, that Saudi, Israel, and Iran did a deal, which is Saudi has been very strong in, listen, we need to rebuild this region in a way that's more commercial. MBS has been a big thought leader in pushing this through. Obviously, Abu Dhabi and Dubai want this as well. And they've seen Israel as a partner, and they've been in talks a lot, and they think of it as their Silicon Valley as part of the Middle East. And they started talking to Iran on many of these issues. Now, what's been interesting is, as Israel has had the opportunity to try and rid itself of ongoing situations being complicated for them over a long period of time, the retaliation things with Iran over Hezbollah has been super interesting because the Iranians have kind of called them up, sent a carrier pigeon, said, we might send a bomb, so if you just put up your thing, right, that's not how warfare happens. That is prearranged. Let's see what the Israeli response is. My guess it will be equally prearranged. If that is the case, then it's a signal that this whole Middle East situation, there are more people trying to clean it up in different ways. So I'm actually more positive about all of these than most people are.
Look, I would like to say as well, I'll frequently come out to the audience. So if you do have some questions, hopefully we've got a roving mic. I was told that we do. So do please get involved. Your questions will probably be better than mine. Do want to just quickly ask this as well, though. Given the current inflationary environment, What are your expectations for the central bank policies and their potential impact on interest rates and asset prices? I suppose it's interesting that you said whilst you're an optimist, fear often dominates other things.
Yeah, so inflation was 2022 story.
Yeah?
And 2021 story. So all we've seen, if we look at the US inflation numbers came out today, everyone's like, oh my God, they came out 0.1%, more than expectations. Look at the numbers, 2.5 years, every single number has been lower. Inflation, headline inflation in the US is 2.4%. It's going to keep falling. So in Europe, it's been falling. In some countries, it's already been negative. So I think inflation is a story of the past. Now, inflation, don't forget, doesn't mean our prices go down. You're still paying that ridiculous price at the supermarket and the restaurant and everything else. So that is real. Wages did readjust somewhat. But the inflation story, i.e. the fear of what it does to financial markets and the Fed and Bank of England or whoever raising rates, they're all cutting rates now, and they'll be cutting rates for another year, year and a half. Some faster than others, depending on the structure of their labour markets and other stuff. So again, optimist.
Okay. Just before I get into then digital assets and Web3 in a bit more detail, does anyone have any questions on the kind of the overall global economic picture in which we're operating? There's one hand at the side. I don't know whether we can get a mic over there.
Go on, try shouting.
I wonder how you keep track of liquidity flows, part one, and part two, how much you think that drives pricing in the crypto environment?
Okay, so the question was about how I keep track of liquidity and flows and how it impacts the price of crypto. This is all part of the banana zone. This is all part of the big thesis that everybody knows.
We'll come on to that. Spoilers.
Yeah. So many people have got into this space because they understand that there is something going on where wages don't go up a lot. The central banks seem to do stuff and asset prices go up and your kind of future self gets poorer. An asset is purely future deferred consumption. Something you buy today that you can sell later. You're expected to make a return on it to compensate for locking up your money over a period of time. Problem is these things are getting more and more and more expensive. So when I first started in investment banking as a 20-something-year-old, I bought an apartment in London, and it was about 3.5 times my salary. If I look at the average investment banking, young kid in investment banking now, and the same apartment, it's probably 10 times salary. Why? And this is actually to do with central bank debasement that happened from 2008 onwards. When they reset interest rates to zero, the world broke with debt. Most of the countries, if you look at total debt, including private sector debts, most countries are 200 or 300% of GDP in debt. The US is 380% of GDP in debt. The world is actually 400% of GDP in debt. And so what they've done to manage the payments of these debts is the private sector debts have been slowing everywhere. And what we've seen is using monetary liquidity or the balance sheet of the central banks and other things to debase currency. And they're debasing it by about 8% a year. Debasing a currency lowers the purchasing power versus scarce assets. And what happens is the scarce assets optically look like they're going up in value. But what you're actually dealing with is debasement of your savings and of currency overall. And so once I figured what was going on out, I started looking at the world through the lens of debasement of currency and liquidity. Liquidity is the thing that causes it. And so what I found is that, in answer to your question, liquidity, measure of liquidity that we have at my research service, Global Macro Investor, and is also found on Real Vision, is it explains 97.5% of the movement of the NASDAQ and explains 87% of the movement of Bitcoin and of all of crypto. It's all based on liquidity. Liquidity is the driver. Now, what we've got, why crypto outperforms, let's say, the S&P 500, which is also driven by liquidity. The S&P 500 basically just moves by the debasement rate, which is 8%, which is the hurdle rate you need to earn on your assets before you're even making, your future self is going to get wealthier. If not, you're not making money. And then we've got inflation at 2 or 3%. And what you're doing here is crypto is also a secular trend. It's the fastest adoption of any technology the world has ever seen. It's the highest performing asset class of all time in the shortest period of time. You know, Bitcoin's average return is 148% a year. That includes 3 80% drawdowns. So that we've got a secular trend and debasement of currency happening at the same time. Liquidity is driving it. So where are we now in the liquidity cycle? So what's interesting is liquidity is driven by the refinancing of government debts. The government debts are every 4 years. They reset them back in 2008. And we are at the point, and this is what the kind of macro summer and macro fall that I talk about, crypto summer, crypto fall, is the point that these debts need to get refied. In the US, we've got $10 trillion of debt needs to be refinanced. Now, interest rates are here. Trend rate of GDP growth that generates the income to pay the interest is here. They're going to have to bring down interest rates. And they're going to have to inject liquidity to finance all of these debts. And that usually means issuing more debt. So that process is the process of liquidity. We're right in the teeth of it now. This is where it starts. So we've seen, and it's not just the US, it's China, it's Japan, it's Europe, it's the UK, it's Canada, it's everybody. And they all do it at the same time, and the Chinese have gone first. The US have cut rates, everybody else has cut rates. So that liquidity phase, using forward-looking indicators, and I use financial conditions, which lead it by about 5 months, just say it's up only from here. And you know, this is why we're waiting for this price action to happen, is the debasement currency is a real thing. This is the best asset we've ever been given. It protects us from this. Liquidity is the driver. We're just about the point where liquidity is starting to really increase. We're seeing the Chinese really lead it, but we're seeing global M2 rising around the world. So yeah, it's right here, right now, and it's the most important thing you probably don't know about macroeconomics that you need to know about.
It's interesting that you talk about the growth of Bitcoin there, and some really startling kind of figures. As someone who's outside of the tent, I found it was interesting that you predicted that the crypto industry could reach 5 billion users by 2030. Just out of interest, what's fueling that adoption? Because again, to me, that sounds like incredible growth in a very short period of time.
It's staggering growth. What it's basically doing, the number of active wallets, which is in your world with IP addresses, right? So I compare the two. So when the world had 5 million IP addresses and 5 million active wallets, so look, we all have multiple wallets and multiple IP addresses. From that point, the internet was about 1994, I think it was. And we take the snapshot of crypto at the same time. Crypto is growing at twice the speed of the internet. Staggering. Why? Because it's built on top of the internet. Kind of makes sense. When you extrapolate that trend rate of growth out and assume it slows by using how much the adoption of the internet slowed as you start to get larger scale adoption, you get to 5 billion by 2030 or so. If we're at 500 million today, or 550 million, I think Crypto.com, who sponsors here, I think do that, or Blockchain.com, I can't remember who does it, but they, at 500 million, if it grows at 100%, well, next year it's 1 billion, and then it's 2 billion, and it's 4 billion. So it happens very fast. Technological adoption in these exponential trends are super fast. So what that means to all of us is, and I'll go back to what's driving it. One of the key drivers is this is now a $2 trillion market. And if we extrapolate these trends, it's going to $100 trillion by about 2032, 2034. 2 trillion to 100 trillion is the most amount of wealth the world has ever generated in a 100-year period, sort of 50-year period. The entire value of the US stock market is $50 trillion. It's twice the accumulated value of everything that the United States has produced in terms of public companies. Right? That's the scale of what is happening here. And why is it happening? Well, it's just a different layer to the internet. Firstly, the one layer, we talk about debasement of currency, also in financial inclusion and all the stuff that Bitcoin brought about, and stable coins. Really important, we've been given a globally homogeneous product, the only one that really exists that is available to everybody instantaneously. People will say gold, but gold, if you go to a village in India, The bid-offer spread from buying it from a gold merchant, it's not a currency. It may be a store of value, but it's not great. Everywhere in the world, with anybody who's got a mobile phone, which is 7 billion people, I think now, or 6 billion people have a mobile phone, can now buy this asset. Right? You can't buy Tesla shares. You can't buy dollars. You can't buy any of these things. Okay, so that's amazing. And this asset is fractionizable. So anyone can put 10% of their wages in. Everyone's on the equal playing field. That never happens. You can't afford most things, but here you can have something that other people can afford. So that has driven a lot of interest from people, particularly if you're in a foreign country where they treat their currency badly. Okay, this is nice. The other thing we've seen is there is really only one currency in the world. It's the US dollar. Nothing else matters. But nobody can get access to dollars. If you're living in the Philippines, you can't go to your bank and get dollars. Now you have the magic of stable coins. This is the fractionalized, mythical eurodollar market, the largest market the world has ever seen. Now everybody gets access to dollars. Everybody gets access to an asset that grows. And why does it grow? It's driven by something you'll understand in technology, Metcalfe's law. Metcalfe's law is the value of a network. And this is a network that's built on the internet, which is the network that blockchain creates. The more activity and the more users, the more valuable it becomes, the more the token price goes up. So the more token price goes up, the more the money that is involved in the system. So what are people building? So they're building a new financial system. They're building the next layer to the internet. We have problems in a digital world. In a digital world, everything you make goes to zero in value over time because you can make infinite amounts of it. It's just a matter of cost and Moore's law. And so we've seen it with everything from cloud compute to email to you name it. Everything goes to zero. So that's a problem. If we're living a more digital world, how the hell do we have value in a digital world? You know, people know that their kids use Roblox and there's money, but that money goes to zero. And then suddenly the smart contract arrives. Smart contract is a way of using blockchain and then attaching scarcity because it's a contract and it's a scarce thing. So now you've created digital scarcity, didn't exist in the world. Okay, that explodes a whole new other set of use cases, whether it's in finance or whether it's in digital assets, gaming, that kind of stuff. So we're seeing huge growth there. We're seeing huge growth in loyalty points, getting brands together with their consumers is what Web3 solves. It gets rid of middlemen. And you've got this incentive system of which you can use in this technology like NFTs or tokens. So I'm seeing giant brands building all around the world. I'm on the board of a company called Divan, which is putting wine on chain and the logistics and the tokenization and putting wine growers with wine consumers. We're seeing wines and spirits industries overall, commodities. I spoke to one of the largest commodity trading houses in the world. They're shipping around cocoa and sugar and soft commodities. I'm like, what are you doing in blockchain? They're like, oh, we all, as commodity houses, all our letters of credit, all our shipping contracts, and all our quality certificates for all of this stuff is now all on blockchain. So we can settle instantaneously any transaction for any commodity.
At the risk of asking a stupid question, I've done the podcast for a number of years, and I have heard similar optimistic kind of vision of how this might expand over that time or how it might be adopted. And yet it still hasn't happened. What facilitates that adoption? Is it AI? Is that the missing piece of the ingredient, or education? Or
it is being adopted. You just don't see it. I've already talked about a commodity. All the largest world commodity trading companies are using that technology on a daily basis. You're seeing Visa use it on a daily basis to improve settlement and speed of transactions. You are seeing the stablecoin industry. It's now something in the top 10 largest holders of US treasuries in the world are these stablecoin companies. Stablecoins are being used for billions of dollars. I can't remember what the total volume of transactions was on blockchain last year, but I think it's to the tune of $5 trillion. No, sorry, $12 trillion. Right, this is not an unused thing. So it's being used at scale. Central banks, corporations are using Bitcoin on their balance sheets. We're seeing, you just don't see it yet because you shouldn't see an underlying technology. Technology should get extracted away. It should just be the rails on which we run. So last time I dialed in here, I was on my Apple Mac on a Cayman Islands line, connecting to a computer. Nobody knows or cares any of the technology.
Yeah.
I press a button, I'm on the screen in London. That's where all this is going.
Let me just ask a quick show of hands out of interest. Who knows what the banana zone is? Say it's about 40% of the room. I'd say, was that about 40% of the room?
Yeah, maybe a bit more, but yeah.
Okay, it's just under half. So very quickly, what is the banana zone?
So the banana zone, we were talking about liquidity from the question at the back before.
Yeah.
So what happens to an asset that is in a secular uptrend, driven by liquidity, that also has a lot of investor and speculative interest with this adoption curve, is every 4 years, everything goes a little bit bananas. So on a linear chart, it does this, and then it does this. On a logarithmic chart, it's all normal because it's exponentials. And this is the point. You've got to roll 10 trillion of debt. What you do is you debase your currency by liquidity. And what happens is prices start to rise. Prices start to rise, creates a reflexivity in this space. And what happens is prices rise even more. So the banana zone is something that almost everybody's waiting for. And I've been speaking to a whole bunch of people recently. I was with one of the world's most famous hedge fund managers today. He's like, when's the fucking banana zone? And it's like, you speak to, I'm on the board of SUI, which is one of the big new blockchains. They're like, at the board meeting, where's the bloody banana zone? Yeah, everyone's waiting for the banana zone because it's just it's a current function of what's happening in the macroeconomy. It's a feature of the market, and it's a great meme that kind of sums up what it's all about. And it looks like a banana because it does that, and it goes bananas.
What did you say in those meetings?
I said, in Cayman, we have an expression which is soon come, which is like, yeah, any day now. It's like, from the macro work that I do, and I probably produced, I don't know, maybe 100 charts on this last month, it's right here and now. We're already seeing the signs of all of the liquidity coming, all of the leads of this stuff. For some reason, the market seems a bit choppier than it should do. And the other thing, weird thing, why the banana zone is so important is, like, everybody's hopes and dreams are in the banana zone. Is that true, right? Yeah. I mean, literally everybody. I mean, anybody in Web3, they kind of know about what the power of crypto is in wealth generation. You know, again, 150% a year returns from an asset class since 2011, with 3 80% plus drawdowns included. When I move out the risk curve to Ethereum, it's about 170-something% a year. When I get to Solana, which is earlier in its adoption curve, it's 280% returns a year. This makes a mockery of any other investing. And so what happens is people end up becoming more and more invested in this space. And so the banana matters to them a lot. But that function of the token price going up drives a lot more activity, which is venture capital activity and other investment activities. People recycle profits. And so what you've got is this perfect behavioral incentive loop that drives this ecosystem, which is why this ecosystem is so much faster. Because in the internet, we couldn't own a part of it. Here you're owning a part of the infrastructure layer. And that's an amazing, empowering thing. And everybody in the world can own it. Imagine if everybody could have owned a share of the internet. That's what we're dealing with here. This is why it's Web3.
Yeah.
Because it's the next iteration.
I'm sure we'll come on to investment in a minute. But before we do, I did say I'd come out to the... Yes, we have a couple of hands. So we'll take a couple of quick questions.
The fears about the banana zone about to materialize.
I'm just thinking the current, most powerful nation in the world, the US, they have custody, they have pure ownership of the dollar, and
So paraphrase for people at the back, why would
Yeah,
the US
so
give
why
up
would the
their-
US give up the power of the dollar and allow this to happen? Last time I checked, Bitcoin was quoted in dollars. It's a dollar world. They're not giving up anything. Don't forget, stable coins, if they're not careful, they're going to dollarize the entire planet. I don't think they want that, but they're actually increasing dollar dominance. Nobody quotes Bitcoin against pounds or yuan. It's against dollars. So it is a dollarized world, and there's nothing they can do about the rise of Bitcoin. I mean, they've tried to fight it. The Chinese have tried to fight it. You know, the Chinese don't want it because of capital flight issues. They try and fight it, but you can't. It's a decentralized technology that exists everywhere and nowhere. So you kind of have to learn to live with it. So the US answer, well, let's regulate Bitcoin ETFs, and then they get kind of custodied within the financial system. We can let them share in it, so it doesn't disrupt everything in one go. But what we're finding is as you start turning over younger people within governments, they all start pushing for this technology. And we've seen it pretty much everywhere around the world. So it just happens over time.
So one other hand, and then we'll move on. Sorry, just
Yeah, hi, Paul. Would you say that Bitcoin is actually dead? Because the reason why I'm saying that is it seems to me that we're coming back from where we started. Like the whole reason why Bitcoin was created was, this reactionary movement about centralized, kind of like centralized power of finance. But now we reach a stage where, with the adoption, with the institution coming in, the BlackRock who are buying, a lot of Bitcoins now, countries that are even getting involved, we end up with a system where a lot of, the Bitcoin custody is now in the hands of the people that we didn't want it to be in the first place. And it seems to me that in 10 years down the line, those who were controlling the market will end up controlling that same market.
Okay.
Basically, those who benefited from Bitcoin was the early adopters, and now retail who are going to be adopting it, they're basically the losing party.
thank you. Paraphrase that quickly.
The question is the idea of Bitcoin when it started was this decentralized power of the people way of getting out of the system, and now it's being adopted by the system and therefore is at the death of Bitcoin. I think because it's a decentralized system, it goes where it goes. Whoever wants to use it, uses it. I actually think it's a good thing that the financial institutions are involved. Why? Because they're going to end up using the technology for everything. And if they do, number go up and you make money. If the actual thing here is, yes, we want a censorship-resistant form of money, which was Bitcoin, but that's not going away. However much they accumulate of it, it's still too distributed to make it matter, I think. In the end, if, let's say, 50% of the Bitcoin's all owned by institutions, sure, go and adopt something else. There's plenty of crypto we can use. But I also think that it's going to empower so many more people, the more it gets adopted even by institutions. And we go from $2 trillion to $100 trillion, and the whole world, including people in West Africa and people in Southeast Asia or Latin America, make money in a way that was not available to them. I'm good with that.
If I rewind a few moments, you started to talk a little bit about investment, and this talk was about navigating the macro opportunity. How do you think investors should allocate their portfolios to capitalize on the current opportunity?
So I'm probably the worst person to ask on this. So listen, I'm a macro guy. I look at macro trends and I bet on them accordingly. I've done that for my whole career. And so it would have been currencies or commodities or stock market, whatever it is. And suddenly this asset comes along that is a supermassive black hole. It is, as I said, literally the NASDAQ is the second best performing asset in the world at 18% a year. If you look at the price of the NASDAQ versus Bitcoin, it's down 99.97%. And it's a hard thing to learn because we're told always to have diversified portfolios. Don't have your eggs in one basket. Don't do this, don't do that. And me and many of the people I grew up with in macro, and the macros are like the George Soros of this world, the people who really take the big bets and try and figure out the global puzzle, have just reduced it down to this is the biggest trade of all time. And therefore, why do anything else? So my personal portfolio, 100% of my liquid net worth has been in crypto for quite a while now, 5 years plus. And I've been investing in the space since 2013. And I think people who know me are familiar with the general asset allocation. I've got more Solana, I've got some Sui, I've got some meme coins, and I keep it very concentrated, super concentrated. I do not recommend that for everybody. But I've been in this space for a very long time, and I probably do more macro work on Real Vision itself. Again, if you haven't signed up for Real Vision, you're not leaving the room. Realvision.com. Than anybody else in the world on this. So I have a level of comfort that allows me to take the risk. The average person, you have an 8% hurdle rate on your savings. And you think, oh, great, rates went up and I'm earning X% in the bank and this is great. You don't realize that you can buy less assets every year. Think how screwed young people are. They can't even buy the houses. They're having kids at the lowest rate in history. Why? Because they can't afford to. Their future has been robbed from them. They come out of university with debts. What choice do you have? Oh, buy the FTSE. The FTSE's gone nowhere in 25 years. What are you going to tell them? Oh, work 3 jobs. Well, that's what they're doing. Their answer is, you're going to have to invest, and you're going to have to take risk, and they are. And for all of us, we've got this 8% hurdle rate. To a young person, it's worse. They can't even get on the ladder. So crypto investing is one of the most powerful things you can do. We're also, many people here are building in the space because we see a better future for the internet using this technology. But investing in it, I think it has to play an important part of people's portfolios. And most people start, when I speak to, let's say, large family offices, they always have a fight about it, about allowing it. They invest a bit, it's like 2% of their portfolio. Before you know it, they're at 20%, and then before you know it, it's all they ever do. And so, I would say, even if you want to be really conservative, if you were to buy 10% of your portfolio, of your savings, your assets, your net wealth, put 10%, and let's say in Bitcoin, because it's easy, without complicating it, and it goes up on average 150% a year, your entire portfolio goes up 15% a year from that one asset. That beats your hurdle rate immediately. Now, there are going to be years where it's going to go down 70 or 80%, and you're going to have to deal with that. That's why you get paid 150% a year returns. But if you've only got 10% and it goes down, you lose. If it goes down 50%, you lose 5%. You don't care. It's not going to kill you. So just think of the optionality of how much it can change your life. We've never been given this number go up technology before. And yes, your mileage may differ. The future returns may not be the past returns. All of that. But anybody who's here understands the breadth and depth of what is being built in this new world. And therefore, investment is about probabilities. What is the probability that these hundreds of thousands of developers, business people, giant brands, all of these, what is the probability that this technology gets adopted at a broader scale? It's got to be very high.
Pretty good answer for the wrong person. Before I let you go then, and hopefully this is something that you feel is more kind of comfortable for you to answer, but what are your top picks? For those who are privileged enough to be able to invest, what are your top picks for the emerging markets that are poised for growth?
Emerging markets?
That are poised for growth.
In crypto or emerging markets generally?
Generally.
In coin. Crypto.
Okay, in crypto. I'll cede to the audience.
3v2.
Right. Smoking chicken fish.
That's the one. The Church of the Smoking Chicken Fish. Okay, so crypto is like all investment markets, there is a risk curve. Stable coins being the least risky, but you're getting the dollar debasement and everything else. Bitcoin, Ethereum, Solana now, these are the proven network adoption. They're pretty safe money. Of course, they will go up and down a lot. Then it's the next phase of adoption. What is the next one that's coming in? I've said for a while, people knew that SUI might be the one. I couldn't say a lot because I'm on the foundation. Not that I know any inside information. I just look at the charts and I thought, this technology is amazing. It's the ex-Facebook team who brought Facebook Libra. And then there's going to be some others. I don't know what narrative's going to catch. Is the AI narrative going to catch? We're going to have a second DeFi season going to catch? I don't know. How I structure a portfolio in all of this is and many of you know this, the don't fuck this up thesis. That is, when you've got something like this, you are going to make a lot of mistakes. It's a very volatile space. Everything looks amazing. Your friends are making 100 times more than you're making, and it's just ugly. Keep 90% of your portfolio in the top 3 tokens, Bitcoin, Solana, ETH. Then with 10%, knock your socks off. Take crazy bets. Invest in the smoking chicken fish. It's a meme community. Why? Because you need to learn about memes. Memes are actually tokenizing attention and culture. They're really important, and they're a lot of fun. And it's like this crazy wild casino of young people, and you'll go, what the hell is this? And then you'll realize, okay, culture is happening in front of my eyes. Also, that bet with, is it going to be AI or DeFi? Put that in that 10% bucket. Because so many people I know go through this crypto cycle, and they lose their minds, and they start doing things they shouldn't do, and suddenly they've gone from making money because the number go up. It's easy. Do nothing, number go up. But what everybody does is, oh my God, I need to buy this, and isn't this the new hot token? Before you know it, number go down, and you're really angry with yourself. And literally, you have a chance of making, and I've had so many friends do this, life-changing wealth, and what you end up doing is fucking it all up. So please don't do that. Use the 10%. Go and have fun. You can lose all of that 10%, or maybe you are that genius who can turn that 10% into the 100 or 1000x. But
This has been fascinating. I imagine everyone in the room would want a bit of time with you. In a weird way, they might soon be able to do that. Or can they do that already?
well, yeah, I mean, I've alluded to this before. We are building, because AI is something that I think the world that, a lot of you know from Real Vision. If you haven't signed up to Real Vision, sign up for Real Vision. You see me on Real Vision or you see me on the YouTube channel, it's a one-to-many experience. But why we like this is more of a one-to-one. We get to talk to each other, we ask questions and all of this. And what I've been building is, I'm building a voice chat with me, so it's trained on my voice, all of my Twitter feed, all of my YouTube videos. I've probably got more long-form finance content than anybody else in the world. So I'm building a Raoul bot, but I'm also working on a video version. And it's not quite there yet. I thought it was going to be ready. It's still not quite there yet, but soon, in this bizarro world, you'll just be able to talk to anybody. If you want to ask about medicines and longevity, and you can call up Huberman and just have a chat. Hey, what do you think about this, blah, 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 what are your thoughts on that? You'll be able to talk to me about crypto and bananas all day and smoking chicken fish, or you about tech. It's like, this is amazing.
All the more reason to sign up to Real Vision.
Realvision.com, don't close the door. You haven't got your phones out, you're not doing it.
Raoul, thank you so much for your time today. It's been fascinating.
Thank you, really enjoyed it.